Okay. Now pay attention. We have just now completed section 50C. Okay. Now after 50C, no, there is one section 50CA. What this section says? This section says that if the assessee has transferred shares. Transferred what? Which shares? Any shares other than quoted. Other than, what is the meaning of quoted shares? The market quote or the market price of the shares, if available from the market, then they are quoted shares. So which type of shares you will get the market price? Listed. Yes or no? And sometimes unlisted shares also you get the market price before their listing also. Yes or no? They are traded on the over the counter market. So I am talking about which shares? All the shares. All the shares which are not quoted other than quoted shares. So if the assessee has transferred a capital asset, and what is that capital asset? Shares other than quoted shares. Then for those shares which are other than quoted shares, if the sale consideration offered for the purpose of capital gains, yes or no? If the sale consideration of these shares is less than their fair market value, meaning the fair market value of the shares is higher and the sale consideration which you are saying that you have received for the shares is lower, then your sale consideration will be ignored and the fair market value will be deemed to be the full value of consideration. That's it. 50CA over. Now this section is for those assessees who used to hide their actual sale consideration. For example, there is one company. Okay. Name of the company is ABC Private Limited. So definitely the market price of these shares will not be available because they are not actively traded in the market, actively bought and sold in the market. Any private company is there. Okay. And I am having 1,000 shares of this company. So who is this? Umang sir. Okay. Umang sir is a shareholder. Umang sir is a shareholder having the shares of this company. How many shares? 1,000 shares. And these 1,000 shares Umang sir is selling for rupees 200 per share. Now, how much will be the sale consideration, guys? 1,000 into 200 rupees, 2 lakhs. So, sir is saying that he is selling the shares for how much? Now, the fair market value of these shares will be determined as per the rules prescribed. So, there are rules which are prescribed in the income tax rules that how to determine the fair market value of these type of shares. Yes or no? So in the income tax rules, whatever rules are prescribed, by following that rules, the fair market value will be determined. Now, assessing officer came to know that the fair market value per share is 350 per share. How much? Meaning if the assessee will sell the shares, he will minimum get how much? And he is saying that he is getting lower than that. So there is some problem, yes or no? How the bloody hell you can sell the shares for 200 if its market value, fair market value which we have determined is at least 350. We don't believe you only. You can sell the shares for at least 350 or a higher amount and you are saying that you are selling for less than 350, 200. 2 lakh will be ignored and this fair market value will be deemed to be your full value of consideration. So instead of 2 lakh, now it will be 3,50,000 as per 50 CA. Will you remember this? So after 50 CA is done. Okay. Now there is one more section, 50D. Which section, sir? 50D. This is not 500, this is 50D, guys. Let me write it properly. Section 50D. Now as per this section, if the consideration for transfer of any capital asset, if this consideration cannot be determined. So in that case, 50D says that the fair market value of such capital asset can be taken as full value of consideration, because the consideration at which the asset is transferred, that consideration cannot be determined. Now when this will be applicable? Say for example, I have 1 asset, 2 assets and 3 assets. Okay. Some jewelry. It is a building. Okay. And some shares. These 3 assets I am selling to Bhagyashree. Okay. 3 assets together. Bhagyashree, I'm in need of money. Okay. So can you please give me 5 crore rupees? So Bhagyashree is saying, yes sir, I have 5 crore rupees. So which assets you want to sell? I said, Bhagyashree, take all these 3 assets and give me 5 crores. So did I transfer these 3 assets? Oh, did I transfer these 3 assets? Tell me yes or no. If I transfer these 3 assets, so total consideration which I am getting for 3 assets is how much? But out of that consideration, for which asset, how much I am charging? How much I charge for building? I don't know. How much I charge for shares? I don't know. How much I charge for jewelry? I don't know. Although it is not a jewelry, but symbolically, yes or no? Did you understand? So all the 3 assets I transferred together and I got one consideration, that is a total consideration of all these 3 assets. But out of that, how much is the consideration for building? Because that consideration will be used to calculate the capital gain of building. How much is the consideration of jewelry? Because that consideration will be used to calculate the capital gain of jewelry. How much is the consideration of shares? Because that consideration will be used for calculating the capital gain of. Now separate capital gain for separate asset. If I have to calculate, so I have to separate the consideration. But in this, how much consideration I have charged for which asset, even I don't know. And neither the Bhagyashree knows. Yes or no? She has given me a lump sum amount. In that lump sum amount, the consideration for all the assets are given. So can the consideration of a single asset be determined? No. So in that case, 50D will come into picture. And 50D says that if the consideration of any capital asset, transfer of any capital asset cannot be determined, then as per 50D, the fair market value of such capital asset can also be taken as the full value of consideration. Yes or no? Now starting from section 5050, we started from 50 today. Capital gain on transfer of depreciable capital asset forming part of block. Section 50A, capital gain on transfer of depreciable asset not forming part of block, individual assets on which the depreciation was allowed under section 32(1)(1). On what basis? SLM basis. How to calculate that capital gain? Yes or no? Then after 50A, 50AA, 3 assets, if you remember the name, market linked debentures, then units of specified mutual fund which was acquired on or after 1st April 23, and third asset, unlisted bonds or debentures which are transferred on or after 23rd July 2024. For these 3 assets, How to determine the capital gain? That we also saw. Yes or no? Then after 50 AA, 50B. Capital gain on slum sale. Yes or no? Then after 50B, 50C. Stamp duty value of the immobile property will be deemed to be the full value of consideration of the immobile property to determine the capital gains. If the stamp duty value is higher than sale consideration and the difference between the stamp duty value and the sale consideration is more than 10% of sale consideration. Do you remember that? Along with this, we also did one more section which we left in PGBP. Same to same, copy paste. Yes or no? Then just now we completed 50CA. If the consideration for transfer of your shares, which shares? Any shares? No. Only the shares which are other than quoted shares. The market price of these shares are not available. Because if the market price is available, you cannot hide the correct value. Okay, no? So if you will try to lie to the income tax department, immediately they will catch you. Oh, market price is 500 and you are saying you have sold for how much? 200. You will be caught immediately, then and that time. So you will not be able to hide. So usually people don't hide at what price they have actually sold the quoted shares. But they usually hide at what price they have sold other than quoted shares, whose market price is normally not available. So if the selling price of other than quoted shares, selling price means sale consideration of other than quoted shares is less than what? The fair market value determined as per prescribed rules. Yes or no? Then the sale consideration will be ignored and the fair market value will be deemed to be the full value of consideration. You have to remember this, 50CA. Okay. Then 50D. Sometimes if the consideration for transfer of a capital asset cannot be ascertained, cannot be determined, in that case, the fair market value of that asset can also be taken as full value of consideration. This is the end of section 50 series. Okay. Now let's come to section number 51. And now see, whatever I am explaining here, no, the same thing is going to come in your IFOS also. And that time I will say YKT. You know this. That time I am not going to explain whatever I am explaining right now. Okay. So section 51 says that advance money received for transfer of any capital asset, is forfeited. Why? As negotiations did not result into actual transfer of such capital asset. Such capital asset, guys and girls, please pay attention. I have one capital asset. Can you see my capital asset? This capital asset I want to sell you. You want to buy? Say yes. I want to buy this. So you want to, I want to sell this. So you want to buy this. Yes, you will have to buy it. So if you will not buy it, if you are not ready to buy it, I will not be able to explain section 51. So buy, please. Okay, so this is my capital asset. For example, this is my capital asset. I want to sell this capital asset and you want to buy this capital. So I am a seller and you are a buyer. So we decided that this capital asset I am going to sell you for 20 lakh rupees. How much? Very high. But this is not a capital asset also, no? Just imagine that this is a capital asset. I want to sell for 20 lakhs and you also agreed to buy this for 20 lakhs. So what we will make? We will make a sale agreement. So sale agreement will be made between the seller and the buyer. Yes or no? Now in this sale agreement, how much selling price is fixed? 20 lakh selling price is fixed. Yes or no? Now see, as per the sale agreement, it is required that out of the selling price, some selling price you are going to pay me as a token money right now, advance money. Only then we will enter into a sale agreement, no? So if you are really interested in buying the asset, give me some consideration. If not 20 lakhs, but at least give me some part of 20 lakhs as a token money, advance money. Only then I will think that you are a genuine buyer. You are actually wanting to buy this asset, yes or no? So, hello, if you want to buy for 20 lakhs, so we will enter into a sale agreement, and as per the sale agreement, you will give me out of 20 lakhs, advance you are going to give me 2 lakhs. And balance amount? Balance 18 lakhs, you are supposed to give me in 3 installments. How many installments? Of 6 lakh each. Yes or no? And when you will give me the final last installment, no, at that time the capital asset will be transferred on your name. Definitely, sir. If I don't get the entire 20 lakhs from you, will I transfer the asset to you? If I am selling the asset for 20 lakhs, give me 20 lakhs, then only I will transfer the asset. Then only I will transfer the ownership, no? And to pay these 3 installments, I have given you some time. So after the date of sale agreement, within 15 days, yes or no, you have to pay first installment. Then within 16 to 30 days, you are supposed to give me balance 6 lakh. And then from 30 to 45 days, within these 45 days, you are supposed to give me the balance 6 lakh. And when you will pay me the balance 6 lakh, at that time I will transfer. Transfer what? My capital asset on your name. Then only the capital asset, ownership, possession, everything will be given to you. Understanding? So this is the agreement made between you and me. Yes or no? So right now, the moment we will enter into an agreement, right now you are going to give me how much? 2 lakh. Meaning I have sold the asset to you. But I have sold the asset to you right now on a condition that you are supposed to pay me the balance 18 lakhs like in these 3 installments. Yes or no? If you pay first installment, second installment, third installment, meaning you have paid me entire 20 lakhs, I will then transfer the asset to you. Then the transfer will take place. And now, if you have given me all the installment, if I will transfer the capital asset, then I will calculate what? Capital gain. Who will calculate the capital gain? Buyer, no? Or seller? So capital gain will be calculated by seller, and in that case the seller will show how much as the sale consideration? Entire 20 lakh. Entire 20 lakh means this advance money will also be shown as a part of sale consideration, full value of consideration, and this 18 lakhs will also be shown as a part of full value of consideration. Meaning this 2 lakh will be treated as your full value of consideration, and this entire 18 will also be shown as your full value of consideration only if the transfer takes place. But is it possible that something happens and the transfer is cancelled, sale agreement is cancelled? What should happen for that? You just now paid me advance of 2 lakhs. You agreed to pay the balance 18 lakhs in 3 installments. First installment is due in, I called you. First installment is due. You did not answer, kept the phone. I said busy. No problem. The buyer will come and pay both the installments together. After 30 days, I again gave you a call. Hello, buyer, I am a seller. You remember, I sold one asset. Hello, hello, hello. Voice is not coming. Hello, hello. No signal. Out of coverage area. Then I'm calling. The person whom you are calling is out of coverage area. I said, no problem, no problem. The buyer will pay all the 3 installments together. Now 45 days. On the 45th day, I was waiting for so many days. Many people came to me, started asking me that, sir, you want to sell this asset to me? I said, no, I have already sold. How can I sell the asset which I have already sold? I cannot break this agreement till 45 days. If I will break, you will sue me. That, sir, you have sold the asset to me, you cannot wait for 45 days. Let me come. Within 45 days, I was supposed to pay you the entire money. No, I was coming only before that you sold the asset to someone. You will sue me. So I cannot take that risk. But 45 days, you should also come, no? 45 days, I turned down other proposals. That like somebody is coming and giving me what? Sir, I can give you 25 lakhs, but sorry, asset is already sold. Somebody coming, sir, I am giving you upfront, right now, full amount I am paying. Give me the asset, I want to buy. Sorry, asset is sold. I am telling everyone that the asset is sold. But this buyer, he was just like you, not answering my questions. Third call I made on the 45th day. Hello, buyer. This time looking at my number only, you cut the call. Cutting my call. 45th day over, no? Then it will be written in the sale agreement that if you will not pay the balance amount within 45 days in these 3 installments, now I have all the rights to cancel the sale agreement. Now I will not transfer that asset to you. And now I can transfer the asset to whoever I want to transfer. Because you are not a serious buyer. Wasting my time also. 45 days have gone. You have not yet paid me what? The balance amount of consideration. How many days should I wait? I waited for 45 days. You did not pay me the balance consideration. Now I have full right. As per the agreement, I have full right to cancel the agreement. I typed a message, mail, that dear Mr. Buyer, this was the sale agreement dated this. As per the sale agreement, we agreed to buy and sell the property for 20 lakhs, against which you gave me 2 lakh and the balance 18 lakh you were supposed to pay me in 3 installments like this. I tried to give you a call, but you did not pick up my call. You did not pay the balance installments and 45 days are over. I'm typing, okay? I'm typing a mail. It has to be legally, documented. So now, as per the sale agreement between us, after the expiry of 45 days, if the buyer does not pay the balance amount of consideration, seller, meaning myself, has the full right to cancel the sale agreement. So I am cancelling the sale agreement. I am not going to transfer the asset to you. Bye-bye. Yours truly, Umang sir, seller. The mail sent. The moment you saw the mail, immediately buyer calling seller. Hello? Hello? Seller. Buyer is speaking to seller now. Hello? Buyer. Who buyers? Because for first 45 days, you were like, who seller? Now it is my turn. After 45 days, the moment I will cancel the agreement, no, you will immediately call me. That, sorry sir, I could not pick up your call because sir, I did not have enough money, this and that. The type of, excuses which you give when you don't come to the class. Bullshit. Those excuses now you will give as a, sir, actually no, my uncle, he fell down from the cycle and he broke his leg, sir. Because now he was admitted to the hospital, I was donating blood to him. Bloody falling from the cycle, you are donating blood? What bullshit you are talking? I am not coming from Vellore directly, huh? Mental hospital. Don't consider me as a mad person that I will believe you. Oh, so bad, huh? So sad to hear. So now what to do? By saying, sorry sir, my wife no. She said that we don't want to buy the asset. This excuse. So hence I was not picking up your call. I was trying to convince my wife that let's buy that asset. Sir is waiting for so many days. I should pay the balance consideration and I will buy. Sir, you remember, my wife scolded me very much. She was very adamant. She was not ready that we should buy this asset. And I could not tell you, sir. I am so sorry, sir. That is the reason. I have to stay with my wife. No, she would have thrown me out of my house. Sir, so hence, very sorry, sir. Very sorry. We will not be able to buy the asset. Sir, sorry, sir. Sorry. I said, no problem. I have cancelled the agreement. I have already sent you the, you remember, no, mail. Sale agreement, cancelled. No need to buy. No problem. Bye-bye. I cut the call. Immediately you called me, sir, why did you cut the call? I said, sale agreement cancelled. Who are you? I don't know you. No, sir. Sir, you remember? I gave you that advance of? Why would I give back that advance to you? You might not have seen that agreement properly. In the agreement it was written that if you fail to pay the balance installments and if I cancel the agreement because of the non-payment of the balance installment, I have full right to cancel the agreement and forfeit the advance. Hence I am forfeiting your advance. Don't ask me for that 2 lakh now, because I have missed lot many opportunities during those 45 days to sell the asset to someone else. Every time somebody came to me, I was telling them that asset is already sold. Asset is already sold. See, I have taken the advance also. And now, bloody, you are not purchasing that asset to me, not giving me the balance amount and asking back the advance which you have paid. No, I will forfeit the advance. And it was written in the sale agreement. So as for the sale agreement, now I am cancelling the advance. Tata, bye-bye. Did I sell the asset? Did I transfer the asset? But the consideration for that transfer, part of that consideration I have already received as advance and now I have forfeited. See, if I would have transferred the asset actually, then this advance would have been taxed as my full value of consideration to calculate my capital gain. So this advance would have been taxed as capital gain income. Yes or no? But for that, it was required to transfer the asset. So definitely, now since all the installments are not paid, yes or no, so the transfer of capital asset is not taking place, so definitely the seller is not going to calculate capital gains right now, and if he is not going to calculate the capital gain, this 20 lakhs, including this 2 lakhs, cannot be taxed under the head capital gains right now. Because to charge this 2 lakhs, which was a part of your consideration under the head capital gain, it was required that the capital asset should be transferred. But since the capital asset is not transferred, this 2 lakh cannot be taxed right now. Understanding? So there comes a section 51, which says that any advance money received and forfeited, any advance money received and forfeited in the course of negotiations for transfer of a capital asset, but the negotiations did not result into actual transfer, then that advance money which is received and forfeited will not be taxable as capital gain right now, because for that the asset is not transferred right now. Yes or no? So since the asset is not transferred right now, this 2 lakh will not be taxable right now. But in the year when the asset will be actually transferred by the assessee, at that time this 2 lakh should be taxable as your capital gain income. Yes or no? So whenever the seller is going to sell that asset actually in the future, that time this 2 lakh should be taxable as your capital gain. Because if he would have sold the asset right now, definitely this 2 lakh would have been taxed as your capital gain income. Yes or no? Since the asset could not be transferred right now, hence this 2 lakh could not be taxed under the head capital gain right now. But whenever the assessee will be transferring that asset in the future, at that time this 2 lakh should be taxable as capital gain income. But how to do that? How to consider this 2 lakh as a capital gain income in that year? So do one thing. Whenever you will sell this asset in the future, that time will you actually calculate your capital gain? So for example, there is another buyer, and that buyer is purchasing this asset from me for rupees 25 lakhs. So actually I am transferring the asset. Actual transfer is taking place in the future. Okay. That time the transfer is taking place at 25 lakhs. So what is my full value of consideration? 25 lakhs. Minus transfer expense. Assume that there is no transfer expense. Nil. So what is the net consideration? 25 lakhs. Minus cost of acquisition. And for example, the cost of acquisition of this asset in my hands was only 10 lakhs. And there was no cost of improvement. So what is the cost of acquisition? 10 lakhs. So out of 25 lakhs, I will reduce what? 10 lakhs. How much will be my capital gain? So that time the 15 lakhs will be taxable. Yes or no? But that time this 2 lakhs should also be taxable as capital gain. So that time 15? No. 17 should be charged. Understanding? But to do that, this 2 lakh will be adjusted out of the cost of your asset. This 2 lakh will be adjusted out of the cost of your asset at the time when the asset is actually transferred. So when did I transfer in future? Oh, later on you are transferring, no problem. That time you are calculating your capital gain. What was the net consideration? 25 lakhs. Out of that, how much cost you were reducing? 10 lakh. Out of that 10 lakh, adjust this 2 lakhs. So instead of allowing the cost of 10 lakh, now you will get the deduction of 8 lakhs. 10 lakh minus 2 lakhs. 10 lakh was the cost of acquisition of the asset minus advance money received and forfeited, adjusted as per section 51. Adjusted as per section 51. So your cost will reduce by 2 lakh. So instead of 10 lakh, now you will reduce how much cost? Because out of 10 lakh, 2 lakh cost you have already received and forfeited in the form of advance money received and forfeited. No. So that 2 lakh rupees cost which you have already received earlier and forfeited in the form of advance, yes or no? That 2 lakh cost we are not going to allow. So reduce that 2 lakh cost. So now your cost will be 10 lakh or 8 lakh. So now your capital gain will be 15 lakh or 17 lakh. So this way, this 2 lakh will be additionally taxed as your capital gain, but not now, in the future. Understood? This is section 51. So what section 51 says? Section 51 says that any advance money received and forfeited, any advance money received and will be adjusted out of cost of acquisition of such capital asset when such capital asset is actually transferred by the assessee later on. Yes or no? So whenever such capital asset is actually transferred by the assessee later on, that time the assessee is going to calculate what? Capital gain. The assessee is going to calculate what? So to calculate that capital gain, assessee will reduce cost of acquisition of such capital asset. Yes. Out of that cost of acquisition, this has to be adjusted. And this adjustment will happen as per section 51. Understanding? Sure, no? Pakka? This was a bullshit section, you know. Even bullshit is better than this. This section this was a loophole in the Income Tax Act. Now tell me, what is the loophole? You are receiving advance money right now. You are forfeiting it right now. But when it will be taxable as your gain? Today or in future? When you will actually transfer the... What if you don't transfer only? This 2 lakh which you have received and forfeited will never be taxed. Yes. Because section 51 says that this 2 lakh will be adjusted out of the cost will be adjusted out of the, and that cost will be reduced while taking the deduction when this asset is actually transferred by you. What if this asset is transferred by me after 20 years? After 5 years, after 10 years, after 20 years. So till that time this 2 lakh will not be taxed at all. It will be taxed after 5 years, 10 years, 20 years. And someone says he does not sell the asset only. I am very much hurt. I could not sell the asset right now. So now I will not try to sell this asset. So in my entire life I did not sell the asset only. So this 2 lakh was never taxed only. Understanding or not? And see, this 2 lakh was advance money received and forfeited. Adjusted as per section 51. Yes or no? This was such a loophole, no? That the persons who wanted to take their taxable income from other person, no? They used to take their taxable income in the name of advance money. For example, I am an assessee. Okay, I have sold some goods. I have sold some goods or services to Bhumika. And I am telling Bhumika that Bhumika, the goods or services which I am selling are worth 5 lakh rupees. How much? So Bhumika is now going to pay me 5 lakh rupees as my income. Because some goods or some services I have given to Bhumika, and for that, if she will give me 5 lakh, will that 5 lakh be my income? On that, will I have to pay tax? Yes or no? I will tell Bhumika that Bhumika, some goods I have sold you, some services I have given you, for that you are supposed to give me how much income? 5 lakhs, no? Wait, don't give me that 5 lakh. Wait, 2 minutes. Stamp paper. I will make a sale agreement. Bhumika, I want to sell one asset to you for 50 lakhs. You also say, that sir, okay, I am ready to buy. Okay. So, Bhumika is becoming a buyer and I am becoming a seller. And we are making a sale agreement. Sale agreement for transferring this asset. Yes or no? So, this is my asset. This is my asset. And I want to sell this asset to Bhumika. Okay. So, that sale agreement I am making. See, I don't have an intention to sell this asset. And Bhumika also does not want to buy this asset. That she knows and I know. Nobody else knows. Sale agreement speaks, no, sir wants to sell. Sale agreement speaks, no, Bhumika wants to buy. Now, as per this sale agreement, I will say, Bhumika, I am ready to sell the asset for 50 lakhs. Bhumika will say, yes sir, I am ready to buy it for 50 lakhs. I will say, okay Bhumika, pay me 5 lakh rupees advance. That 5 lakh rupees which I was supposed to get as my income, on which I was supposed to pay tax, that 5 lakh rupees I am taking in the form of advance for transferring this asset as per the sale agreement. Now Bhumika, I will give you some time to pay the balance amount as installment. Don't come and pay, because I don't want to sell. Bhumika says, sir, even I don't want to buy. So I will give you a call after 15 days. You are not supposed to pick up the call. After another 30 days, I will give you a call. You are not supposed to pick up the call. Or even if you pick up, you will say, hello sir, why is it not coming? Okay. And after 45 days, I will give you a final call. That time you tell me that sir, I don't want to buy. Immediately I will type. Sale agreement, this. You remember, no? Entire story I will type. And I will cancel the sale agreement. And the moment I will cancel the sale agreement, your advance money which you have given, 5 lakh, will be cancelled. So Bhumika say, so sad sir. I will say, yes Bhumika, so sad. You could not buy the asset. I could not sell the asset. So as per the sale agreement, I am forfeiting the advance. What is that 5 lakh was? My income only, which I wanted to take as my income. No, if I would have taken that as my income, I would have to pay tax on that 5 lakhs. Getting my point? Now that 5 lakh I took in the form of advance and I forfeited, because I very well know that this 5 lakh will be adjusted out of my cost of this asset. Yes or no? For example, the cost of this asset was 18 lakhs. How much? So whenever I will sell this asset in the future, that time the cost will be 18 lakhs minus 5 lakhs. That time this 5 lakh will be taxable as capital gain. I never intend to sell this asset to anyone. I will keep this asset with me forever. So this asset stays with me forever. So this 5 lakhs which I have received and forfeited for transferring of this asset will never be taxable in my hands because I am not going to transfer this asset. Am I going to transfer this asset? Tell me. So if I am not going to transfer this asset remains with me. Then this 5 lakhs which I have received, my income only I have received in the form of advance money and which I have forfeited. Will it ever be taxed? No. So everyone started taking their income by doing such wrong things because of this bullshit section which said that the advance money received and forfeited will be adjusted out of the cost at the time when this asset is transferred by the assessee in future. What if the assessee transfers after 5 years, 10 years, 50? So this advance money is not taxable. This income is not taxable till that time. And people started to take the incomes in the name of advance money received and forfeited. So this became a very good section for tax evaders to evade their taxes on their income. One person, no, in his entire lifetime, he wanted to sell the asset 10 times, but never was able to sell the asset. Every time he wanted to sell, he received the advance and forfeited. Now these type of cases started increasing, and income tax department started seeing these kind of cases. But oh, this assessee in his entire lifetime, last year also some advance money you received and forfeited, macha. Huh? You could not sell your advance. Huh? This year also you wanted to sell, you could not sell. Last year how much advance you received? 10 lakhs. This year 20 lakhs. Next year also I am going to receive. But I know that I will not be able to sell because I don't want to sell only. So people started taking wrong advantage. So a beautiful thing happened. In which year, you know? In the Finance Act 2014. Which Finance Act? That with effect from 1st April 2014. With effect from 1st April 2014, any advance money which is received and forfeited, any advance money which is received and on or after 1st April 2014 will now be treated as your income. Even if it is a capital receipt, it will be treated as your income. And now this type of income will be taxable in the year of receipt only under the head IFOS. The people who were fooling the government, no? Now those people are caught. You will receive the advance money, you will forfeit it. If you have received and forfeited on or after 1st April 14, from this time onwards, now this will be treated as your income. And now we are not going to adjust this under section 51. Immediately in the year of receipt only, we will charge this under the head IFOS. Now later on, when you will actually transfer the asset, yes or no, that time reduce the cost as it is. No need to adjust this advance under section 51. So now, since it is already taxed under the head IFOS, hence adjustment of this kind of advance under section 51 is no more required from cost of acquisition. So whenever the assessee is going to sell this capital asset in future, entire cost of acquisition he will reduce without adjusting this advance, because this advance will already be taxed under the head IFOS. So that means section 51 is applicable for which advances? The advances which you have received and forfeited prior to 1st April 2014. So are you an assessee? Transferring your capital asset in 25-26. You tried to sell this asset in 2009-10. Prior to 1st April 2014. In the year 9-10, you received one advance and you forfeited. That advance was not taxed under the head IFOS. That advance will be adjusted under section 51 today, when you will actually transfer the asset. So now can I put it like this? Pay attention everyone. Advance money which you have received and forfeited. Date you have to remember. Date is very, very, very important. Okay, no? Which you have received and forfeited. When? Prior to 1st April 2014. It was not considered as your income. At that time it was not considered as your income. Hence, was not taxed. What was not taxable under the head IFOS. So that type of advance money received and forfeited was adjustable under section 51 from cost of acquisition. Yes or no? So whenever this type of advance you can see in the question, right now you are transferring an asset. Right now you are transferring an asset in 25-26. Will you calculate the capital gains? Yes. But to calculate the capital gain, will you reduce the cost? Yes. Out of this cost, you will have to adjust this type of advances, which you had received and forfeited prior to 1st April 2014. Yes or no? Because those advances were not treated as your income and were not taxable under the head IFOS. So those advances, right now, you are supposed to adjust from the cost as per section 51 to calculate your capital gain. Yes or no? Now, if the advance money was received and forfeited on or after 1st April 2014, so with effect from this date, with effect from, now this is treated as your income, and this is taxable in the year of receipt only under the head IFOS. So the advance money which has already been taxed under the head IFOS, will you again come and adjust this type of advance under section 51? No. So adjustment under section 51 from what? Cost of acquisition is not required for these type of advances. Will you remember this? Now when I will teach you IFOS now, in IFOS, this income will come. What income you are receiving? Any advance money received and forfeited on or after 1st April 2014, which is not adjustable under section 51. Yes or no? Will be treated as your income, and it will be specifically taxable under the head IFOS. Specific charges there. So no need to adjust these type of advances while calculating your capital gains. Yes or no? But those advances which you have already received and forfeited prior to 1st April 2014, they were never treated as your income. They were never taxable under the head IFOS. So they should be at least taxed as your capital gain. So it will be taxable in the year in which the assets are transferred, because they are yet to be adjusted from your cost. Will you remember this? Hello. Now tell me, if this is an assessee, this is an assessee, okay, no? Assessee has transferred what? Capital asset. So on transfer of capital asset, tell me, capital gain will be calculated? Yes or no? Capital gain will be calculated. Full value of consideration will be taken. Minus what? Transfer expenses. What are you going to get? Net consideration. Out of that, cost of acquisition of the asset to the assessee. Yes or no? Out of this cost of acquisition, you will do the adjustment. Adjustment of Advance money received and forfeited under section. So what advance will be adjusted from this cost? Only that advance which is received and forfeited by the assessee. So adjustment of which advance? Come on, tell me. Adjustment of advance received and forfeited by the assessee only. Yes or no? On or sorry, not on or after, before 1st April 2014. Did you understand this? But wait. The assessee got this capital asset. This was the capital asset, no? Which the assessee is transferring. Assessee got this asset, capital asset. See, color, same color, no? Yellow color. So the asset which I am transferring right now, that asset came to me by way of gift. By way of from any other person. The person is known as previous owner. Yes or no? For example, my father gave me one asset under a will or inheritance, or my father gave me an asset as a gift. So he is my father and this is me, Umang sir. Okay, no? The asset which my father gave me, I am transferring that asset. Yes or no? Now for this asset, whatever advance money is received and forfeited by me prior to 1st April 2014 will be adjusted out of my cost when I will transfer this asset in the future. Yes or no? But can I say my father would have also received and forfeited an advance? Advance received and forfeited by whom? By the assessee or by the previous owner? By the previous owner. Okay, no? Hello? This was prior to 1st April 2014. My question is, this advance money received and forfeited by my father, meaning the previous owner, will it be adjusted here out of my cost? Section 51 clearly says that any advance money received and forfeited by the assessee will be adjusted out of the cost of the assessee when the assessee will actually transfer the capital asset. Assessee will actually transfer the capital asset. At that time, from the cost of acquisition of the assessee, the advance money received and forfeited by the assessee before 1st April 14 will be adjusted. Only this. Any advance money received and forfeited by the previous owner will also be adjusted out of the cost of the assessee. Section 51 does not give power. Hence, this advance money received and forfeited will not be adjusted. Whatever my father received, no, will never be taxed in his hands. If my father would have sold the asset, capital gain would have been calculated in the hands of my father. At that time, his advance money received and forfeited would have been adjusted there. But that cannot be adjusted out of my cost of acquisition when I am calculating my capital asset. Because section 51 clearly says that the advance money received and forfeited by the assessee will be adjusted out of the cost of the assessee at the time when the assessee transfers that capital asset in the future. So if I have received and forfeited any advance after I received that asset from my father, yes or no, those advances I can adjust from my cost. But whatever advances which my father received and forfeited cannot be adjusted out of my capital gain to calculate my capital gain income. The logic being simple, that why should be an amount be taxable in your hands, hello, which was never supposed to be taxable as your capital gains. This would have been considered as your father's capital gain if he would have sold it. So this was also again a loophole. If I want to transfer this asset, okay, no, I tried to transfer this asset, I took advance of 5 lakh rupees. I forfeited that advance. Now if I don't want to pay tax on this advance, no, and still I want to transfer the asset, what I will do, I will not transfer this asset on my name. I will give this asset to my brother. I will give this asset to any of my family member and tell my family member to sell this asset. What will be the cost in the hands of my family member? My cost will be the cost in the hands of my family member. Yes or no? Cost to previous owner as per 49(1) will be cost in the hands of family member. Yes or no? But my advance money received and forfeited will be adjusted out of his cost, nowhere mentioned. So 5 lakh which I received and forfeited will never be adjusted out of cost of my brother when he will transfer the asset. So this 5 lakh was received and forfeited by me. I did not pay tax on that, and it was not adjusted out of the cost when the asset was actually sold by my brother. That time also it was not adjusted from there, because it is not an advance money received and forfeited by my brother. It is received and forfeited by the previous owner. It will not be adjusted. So this was also a loophole. So to plug in all those loopholes of section 51, the amendment came. And now this is the picture. On or after 1st April 2014. What did I say? On or after 1st April 2014. If the advance money is received and forfeited, that will be treated as income and will be taxable in the year of receipt only under the head IFS. Now that will not be adjusted under section 51. So whenever you will sell the asset in the future, reduce the full cost. No need to adjust this from the cost of acquisition. Yes or no? But if the advance money is received and forfeited prior to 1st April 2014, they are still adjustable under section 51. Because there is a possibility that right now, whatever asset you are transferring, okay, no, that asset you tried to transfer prior to 1st April 2014 also. And on that asset, you would have already received and forfeited an advance prior to 1st April 2014, which was not yet adjusted, and that time also it was not taxable under the head IFS. So such type of advances should be adjusted right now while calculating your capital gain under section 51. It will be adjusted only if you have received and forfeited, not the previous owner from whom you are getting the assets by way of specified modes under section 49(1). Getting my point? So any advance received and forfeited by the previous owner will not be adjusted out of your cost. Understanding? Even if they were received and forfeited prior to 1st April 2014. But all the advances which are received and forfeited by you prior to 1st April 2014 will be still adjustable under section 51. Will you remember this? This was your section 51. Over. Done, sir? Now let's see what we have studied so far. Okay. This is advance money received and forfeited. 50D I have already explained. Yes or no? 50D I have already explained. And advance money received and forfeited, where it is? Advance money received and forfeited. This. See, this entire part I have just now covered. Okay, no? Advance money received and forfeited. What if it is prior to? What if it is on or after? Yes or no? Entire thing I have already explained. Okay. Now pay attention. 2-3 small discussions are still supposed to be completed. Okay. Now see, a new case I am bringing in front of you. This is a new concept. Okay. Assessee, you have convertible bonds. Convertible bonds are debenture. How many convertible bonds you are having? 100 bonds you are having. So one bond convertible, second bond convertible, third bond It will be convertible, meaning at the time of maturity, you are not going to get back your money. Rather, these bonds or debentures will be converted into some new asset. For example, new bonds will be given, new debentures will be given, or might be against the bonds or debentures, you might get shares also. Yes or no? So now these bonds or debentures you acquired in the year 15-16. Which year? 15-16. So you acquired them at a cost of acquisition of rupees 1 lakh. Okay, no? 15-16 you acquired on 1st of October 2015. Now for example, the maturity of this bond was after 5 years. Example, after 5 years. So these bonds will be matured after 5 years. So on maturity you are not going to get back your money, rather you are going to get some new asset. These bonds will be converted into new bonds or new shares. Yes or no? So let's take an example. These 100 bonds or debentures, these 100 convertible bonds or debentures are converted into 1000 shares. Converted into and when they were converted, example, previous year 21-22 they were converted. In which year they were converted? 21-22. Okay. Into how many shares? So for example, they were converted on 1st of October 2021, and on that day the fair market value of these 1000 shares was 1,60,000. How much? Possible or not? Possible? Sure. Now what are you going to do? Come on, tell here. Bonds cost was 1 lakh rupees. In 21-22 you will have to give those bonds, and against that what are you going to get? If you give your bonds and you get the money, then there is no problem. Yes or no? But are you giving bonds? Against that what are you going to get? So the moment you will give your bonds, those bonds, debentures will be cancelled. Extinguishment of right. And for that extinguishment, are you getting any consideration? What? Shares. What is the value? Bonds of 1 lakh going. Against that, how much consideration coming? So gain of rupees 60,000. Should be taxable or should not be taxable? Should not be taxable. Because this gain of 60,000 is not yet realized. This gain will be realized when you will sell the shares. Just because you are getting the shares worth 1,60,000 is resulting into a gain of 60, but that gain, since not coming in your hands, should not be taxable right now on conversion itself. If we do that, the poor assessee, does he have money? Does he have gain of 60,000 in his hands to pay tax on that? So unnecessarily he will be put in trouble, no? But if that 60,000 gain is not in my hands only, then from what amount I should pay tax on this 60,000? To pay tax on this 60,000, I should realize this 60,000 gains. Understanding? So conversion took place in which year? Conversion took place in which year? On conversion there is a gain, but that gain is not realized, so that gain should not be taxable. Because if that gain will be taxable, the assessee will have to pay tax on that gain. From where he will pay that tax? In his pocket there might not be money to pay that tax, because that 60,000 gain is not realized, not coming in his pocket. 60,000 gain realized, coming in pocket, from that he can pay tax. Yes or no? But that 60,000 is not coming in his pocket, not realized only. And charging tax in 21-22 on this 60,000 will unnecessarily put the assessee in trouble. Yes or no? So government is thinking good about us. So in the year 21, 22, which year? 21, 22, when the conversion is taking place. This conversion will be treated as your exempt transfer under section 47. And whatever gain arising, how much? 60,000. Yes or no? Starting from here till here. Yes or no? This 60,000 will be taxable in 21, 22 or not taxable? Not taxable. On conversion, this 60,000 will not be taxable. Sir, we are saying on conversion this 60 will not be taxable. Hence the conversion is treated as exempt transfer. We are not saying that this will never be taxable. This will be taxable in future. When this gain will be realized. When this gain will be realized? When you will sell these shares in future? So for example, these 1,000 shares you sold. Sold in which previous year? Your previous year. 25, 26. On 9/9/2025 you are selling them. Yes or no? And when you will sell them, you sold them for a selling price of rupees 1,90,000, sir. Within these many years, the value of the share will also increase. No, at the time when you got the shares, value of the share was 1,60,000 in 21, 22, and you have held the shares for so many years after 21, 22, and you are selling the shares in 25, 26. Right now, the value of the shares will not be 1,60,000. It would have increased. So what was the value of the shares? 1,90,000. At that time you sold them for 1,90,000. So how much appreciation is happening later on in the value of shares? This appreciation will also be realized, and the earlier 60,000 appreciation will also be realized. Total appreciation realized right now. So that total should be taxable right now. Only 30 will be taxable. Only the what did I say? Appreciation happening from this period to this period. This appreciation should be taxable. Only this will be taxable. Or the earlier one which you have already received now, that will also be taxable. So that can be taxable. How come? When you will sell the shares. For how much you have sold the shares? 1,90,000. So full value of consideration 1,90,000. When you will sell the shares, you will calculate the capital gain, no? So to calculate the capital gain on transfer of shares, you will take the selling price of the shares as what? Full value of consideration. How much? Minus transfer expense. For example, there is no transfer expense. What will be the net consideration? 1,90,000. Yes or no? 1 lakh? Now tell me, out of that, you are supposed to reduce the cost. What was the cost of acquisition of your shares? Cost of acquisition of your shares. You got them, you bought them from the market for rupees 1,60,000, or they became your property on conversion of bonds. So the shares became your property on conversion of bond. Shares became your capital asset on conversion of bonds. So for those shares, if you would have gone in the market at that time, for how much you could have bought the shares for? 1,60,000. So 1,60,000 should have been cost. So if you take 1,60,000 as a cost and you reduce that out of 1,90,000, don't you think only this much gain will be taxable? Hello? Are you realizing this gain only right now? Or the earlier gain also you are realizing right now? So this gain should also be taxable? Yes or no? And this is possible only if cost of acquisition of the debentures or bonds which are getting converted into shares shall be deemed to be the cost of acquisition of your shares. When these shares you will transfer, what will be the cost of these shares? Fair market value. Only 30 will be taxable, or earlier 60 should also be taxable. because now that 60 is also realized. We exempted. Why? Because that was not realized at that time. But when this 60 will be realizing, that time also, that time this 60 should be taxed, no? And that is possible only if this amount is treated as cost of this asset, which you will reduce out of this 1,90,000. So out of 1,90,000, don't reduce 1,60,000, the fair market value, when the shares became your property. No. The shares became your property on conversion of bonds. So whatever bonds which got converted into shares, whatever part of the bonds which got converted into shares, the cost of those bonds or debentures will be deemed to be the cost of your shares. And what was the cost of those bonds or debentures? 1 lakh. So reduce what? 1,49,2A. As per section 49(2)(a), the cost of these shares will be nothing but the cost of those bonds or debentures which got converted into these shares. Sir, as per 49(2)(a), which section? Cost of these shares will be nothing but cost of acquisition of those bonds or debentures which got converted into. So what was the cost of acquisition of those bonds or debentures? 1 lakh. As per 49(2)(a), this will be deemed to be the cost of acquisition of these shares. So whenever these shares will be transferred in the future, you will reduce this amount as the cost of acquisition of these shares, so that this gain as well as this gain, both the gains should be taxed on their realization. Understanding? So, full value of consideration. When you will sell the shares, you will calculate capital gain. To calculate capital gain, what will be the full value of consideration? 1 lakh minus transfer expense, nil. Net consideration, cost of acquisition of these shares as per 49(2)(a) will be the cost of those bonds, those debentures which got converted into these shares. That was 1 lakh. That was reduce 1 lakh as a cost. How much gain? 90,000, meaning this 30 is also covered and this 60, which was exempted earlier because the transfer was exempt, conversion was exempt. At that time this 60 we did not charge. On realization this 60 will also be charged. Understanding? Yes or no? Now tell me, this gain will be short term or long term? 90,000 gain, no? Did you know how to calculate? To calculate that 90,000 gain, you took cost. This much amount you took as a cost. Cost you know. Capital gain also you calculated. How much? 90,000. Now it is very, very important to say that this gain is short term or long term. Depends on period of holding of your shares. Depends on the period of holding of your. The period of holding of my share is from here to here. Yes, period of holding of your shares. When the shares are held for the first time? On conversion, no. When the shares came to you, from that date only you are holding the shares. So if you take the holding period of the shares, this has to be from this date to this date. But this date to this date will be taken as your holding period if only this gain is taxable. The gain for the earlier period is also taxable, no? And that is the reason why this cost is taken as cost of these shares. So if the gain for earlier period is also getting taxed in your hands, then why don't you include the period of holding prior to conversion in the period of holding of your shares? So don't count the period of holding from here to here, rather count your period of holding from here to here. And now check, is this period of holding more than 24 months? Yes. The resulting gain will be long term. And if you check only this period of holding, then the answer is wrong. Why? Because bloody you are taking the period of holding only of shares. And you are taking the cost of bonds as the cost of shares, meaning the gain for that period also is getting taxed in your hand. So the period for which the gain is also taxable in your hands, take that period also as your period of holding of the shares, no? Common sense, which is very uncommon. Now it is common, no? So from where to where you will take the period of holding? From here to here, no? From 1st October 2015 to 9th September 2025. This will be the period of holding, because you are taking this cost as per 49 2A. Hence the period, this period gain is also getting taxable in your hands, and this period gain is also getting taxable in your hands. So if the gain for both the period of holding of the shares as well as the period of holding of the debenture prior to its conversion, yes or no? If the gain for both the period is getting taxable in your hands, then in the period of holding of your shares also include the period of holding of your debentures prior to its conversion. And now check that entire period of holding and say that whether these shares are long term or short term. Understanding or not understanding? Sure. 49.2a, will you remember? One concept is done. Section 47. Many exempt transactions are there. Out of those exempt transactions, one exempt transaction I have already covered. Understanding? Now, one small thing I would ask you. Okay, pay attention. This is assessee. Okay, no? Now what the assessee is having? Assessee is having 100 preference shares. Wait, wait. Wait, sir, wait. Sir, what I am doing? Copy paste. Copy paste, no? My favorite work I am doing. Copy and paste. I will just change the color, guys. Just change the color. Why? Because I have to show you that this is a different concept. Now tell me, instead of 100 convertible bonds, yes or no? Can you have 100 preference shares? Yes or no? Now, can these preference shares be converted into 1000 equity shares? Yes or no? Everything remaining same. Now, whenever these 100 preference shares whose cost was 1 lakh, whenever they will be converted into equity shares, and in return you are getting equity shares of 1,60,000. Tell me, gain is 60,000. Is that gain realized? Should it be taxed? Hence, in the year 21-22, whenever the conversion will happen in that year, that conversion will be treated as exempt transfer, so that this 60,000 is not taxed in the year of conversion. Understanding? But this 60,000 will be realized later on when those equity shares are sold. So this 60,000 should be taxed in that year. So how will you do that? Selling price of equity shares minus transfer expense, net consideration 1,90,000. From that, what cost of equity shares you will reduce? Cost of the preference shares which is converted into equity shares, which was 1 lakh, will be deemed to be the cost of acquisition of your equity shares whenever you will transfer those equity shares as per section 49(2)(a)(e). Here it will be 49(2)(a)(e) and not 49(2)(a). 49(2)(a) gets applied when the bonds are converted into shares or new bonds, yes or no? But if the preference shares are converted into equity shares, so what will be the cost of those equity shares later on? 49(2)(a)(e). 49(2)(a)(e), which says that cost of the preference shares which got converted into equity shares will be deemed to be the cost of those equity shares. Period of holding of equity shares will also include the period of holding of preference shares prior to their conversion. The concept is exactly same. But this 1 lakh, what did I say? Here, this 1 lakh was what? This 1 lakh was as per 49 2A deemed to be what? Cost of acquisition of those 1000 shares. Yes or no? And here, this 1 lakh will be as per section 49 2AE. This will be deemed to be cost of acquisition of 1000 equity shares. So that later on this gain as well as this gain, both the gain should be taxed at the time of transferring your equity shares. Yes or no? Did you take the period prior to conversion in your period of holding? Yes. So here also you are supposed to take that. The same to same concept is there. Only there is a small difference. Here it is 49 2AE and here it was 49 2A. That's it. Everything is same. So can I say conversion of bonds into new bonds or new shares is also an exempt transfer under section 47? Yes or no? And conversion of preference into equity is also an exempt transfer under section 47. Done, sir? Should I move ahead? Very good. You all are very smart. This is done and this is also done. Entire thing I have explained in details. Okay, so whatever you can see in my notes, no, handwritten notes with numbers I have already told you. Okay, now you are just supposed to read these notes at home. Okay, so that you get the examples also. The examples which I am taking here may be having a different numbers as compared to the examples which I have given in my notes. There little bit numbers will be different. Otherwise, majority of the things, numbers will also be same. Okay. Next one. Now, section 51 I have already explained. Done, sir? Now let's talk about zero coupon bonds. Special aspect, guys, special aspects. What are you going to do in the case of zero coupon bonds? Do you have zero coupon bonds? Who has issued? Government. 10 slabs I will give. Government. Infrastructure Capital Company. Infrastructure Capital Fund. Any scheduled bank or any public sector undertaking. What they will do? They will issue. Issue what? Zero coupon bonds. They will issue zero coupon bonds to investors. Yes or no? Hello, sir. So when they will issue, investor will give them what? Issue price, which will be very less as compared to the face value. So for example, the zero coupon bonds, each zero coupon bond has a face value of ₹1,000, and they will be issued at 1,000 or issued at a discount. How much discount? Example, they are issued for 600. And whenever the maturity will happen, what did I say? Maturity. So they will get what? Maturity value. Maturity value will be nothing but their face value, will be nothing but 1,000. So can you see the difference between the maturity value and the issue price? How much is that difference, sir? That difference is known as discount. And that discount is an expenditure for the issuer, will be allowed under the head PGBP on pro rata basis. I have already told you over the life of the bond. How much is the discount? 400. This discount is not given for year of issue. This discount is not given for year of maturity. This discount is given for the life of the bond. So for example, these bonds are issued on 1/10/2025. So issue is happening on this date, and they will be matured on the same date. They will mature also, no? Or in future they will mature. After 1 year, 2 years, 3 years, 5 years, they will mature. So maturity, for example, the maturity is happening on 1st of October 2028. So how many years? 25 to 26. 1st October 25 to 1st October 26, 1 year. 1st October 27, 2 years. And 1st October 28, 3 years. So what is the life of the bond? 3 years. Life of the bond 3 years, meaning 36 months. So this entire discount is not given for year of issue. This is not given for year of maturity. This is given for the life of the bond. This discount is for these 3 years life of the bond. So spread this discount over the life of the bond. Spread this discount over the life of the bond and claim it as a deduction on pro rata basis. In the hands of issuer, this discount will be loss. This will be expense allowable under the head PGBP. On what basis? Pro rata basis. How much is the discount? 400. That is given for how many months? 36 months. 36 months is the life of the bond, multiplied by number of months life in my previous year. In my previous year, how much life of the bond is there? October to March, 6 months. So 400 divided by 36 into 6. Do it. 66.66. Yes or no? Next year, how much life of the bond? 12 months. So 400 divided by 36 into 12. 133.33. Yes or no? And next to next year, same. Previous year, 27, 28 also same. 133.33. But don't you think April 2028 to September 2028, 6 months life is in the year 28, 29 also. Yes or no? So it will be 400 divided by 36 into 6 months life in the last previous year. So that will again be 66.66. So 66.66. Last year also 66.66. And between two previous year, 133.33, 133.33. If you will add all of them, you will get what? 400 total. 66.66 plus 133.33 plus 133.33 plus 66.66. Yes or no? So every year, this issuer will take the deduction of this discount like this. First previous year, how much discount? Full 400 or only 66.66. Second previous year, 133.33. Third year, out of 400, 133.33. And remaining 66.67 in the last previous year, in the year of maturity. Yes or no? Because some life of the bond is in the year 28, 29. Understanding or not? So this discussion I have already done with you in the PGBP head. So we are not here for this discussion. We are here to discuss about this investor. Investor has invested in zero coupon bond. Is it a capital asset for investor? Yes or no? So for the investor, see, for this guy, for this person, it is discount. Discount is how much? 400. How did you get it? Maturity value minus issue price. Yes or no? Issue price. Whatever discount is there will be allowed. Will be allowed. As what? Deduction. Under the head PGBP. Done, sir? This discussion is already over in PGBP. Now let's talk about this investor. This investor. How much is the discount? 400. And this discount is nothing but 1000, which is the not market value, it is a face value, sir. Maturity value means face value. Okay, no? MV means maturity value, which is a face value minus 600, which is issue price. So this entire discount, for someone it is a loss, then for someone that 400 is a gain, no? So for investor, isn't it a gain for you? Should it be taxable under capital gain? Yes. Why? Because sir, ZCB in the hands of investor is equal to a capital asset. Maturity of zero coupon bonds is equal to transfer as per section 247. So on maturity, what is the capital gain? That entire discount is a capital gain, should be taxable as capital gain. So what will be the full value of consideration? Maturity value 1000 minus transfer expense nil. Net consideration 1000. What was the cost? The amount which you paid at the time of issue 600. Then that 400 will be treated as your capital gain. The discount which you got will be taxable as your capital gain on the maturity, because maturity is a transfer. Now sir, this capital gain will be short term or long term? Depends on the period of holding. And if the period of holding of the zero coupon bonds is less than equal to 12 months, then this will be short term capital gain, taxable at normal rates. Yes or no? And if the period of holding of the zero coupon bonds is more than 12 months, then it will be a long term capital gain covered under section 112. Will you remember this? Done. Zero coupon bonds, special discussion done. Only this much. Will you remember? So if a small question on the zero coupon bond, they will give you in the exam, no? You will see stars in the day. With moon also. And sun shining bright. Because of that sunshine, you will get to see the stars and moons also. In the daytime you will see. 2 o'clock to 5 o'clock. 3 hours exam, no? And what type of question they will give you? You want to see that type of question? Write down. Write down. An infrastructure capital fund. Write down. I am dictating a question. You are going to solve this question today at home. The question which I am dictating. An infrastructure capital fund has issued zero coupon bonds on June 1, 2024. 1st of June 2024 at an issue price of rupees 750 per bond. In the bracket write down face value of each bond, each ZCB is equal to 1000. Bracket close. These bonds will mature after, you tell me how many years? 5 years. No, don't write down 5 years, write down only 3 years, because the calculations will be too many. Okay, I don't want to put you in trouble. So only 3 years. So maturity is 3 years. Yes or no? Full stop. Mr. Zen, Zen has subscribed to such zero coupon bonds. In the bracket write down 10,000 zero coupon bonds. 10,000 ZCBs. So Mr. Zen has purchased 10,000 zero coupon bonds. Yes or no? Full stop. Discuss the tax implications. In the hands of. Infrastructure Capital Fund and also in the hands of, fill in the blanks, Mr. Sen. Mr. Sen. This is your HW homework. Will you be able to solve? How much is the discount given? 1,000 rupees face value. Okay. And issue price. Sir, but they are not saying that at the time of maturity, how much amount is given? Bloody zero coupon bonds, when they will be issued, no, they will be issued at discount, and at the time of maturity after 3 years, if this nothing is mentioned, no, they will be matured at their face value only. Getting my point? So what will be the maturity value? 1,000. What is the issue price? How much is the discount? This 250 discount for bonds. Please write down in the first line what you have written. Infrastructure Capital Fund has issued what? Has issued zero coupon bonds, no? So write down has issued 10 lakh. Has issued 10 lakh zero coupon bonds. Because you will have to calculate the total amount of discount. So for that you should know how many zero coupon bonds are total issued. So how many total issued? 10 lakh. And per bond, how much is the discount? 250. So calculate total discount. 250 into 10 lakh bond. For each bond, 250 discount is given. For 10 lakh, how much discount? 25 crores. This 25 crores will be allowed as a deduction in the hands of Infrastructure Capital Fund on pro rata basis. And in the first year, in the year of issue, 24, 25, some discount will be allowed. Then in our previous year, 25, 26, some discount will be allowed. Next previous year, next to next previous year, till the bonds are existence. Yes or no? So bonds will be in existence for how many years? 3 years. Meaning, starting from 1st June 2024 to 25, 26, 27. 1st June 24 to 1st June 25, 1 year. 1st June 26, 2 years. 1st June 27, 3 years. So for these 3 years, till 1st June 2027, the bonds will be in existence. So some discount will be allowed out of 25 crores. Some discount will be allowed in the last year, 24, 25. Some discount will be allowed in this year, 25, 26. Then some in 26, 27, and some discount in 27, 28 also, because the bond's life is till 1st June 2027, meaning 27, 28. Yes or no? So out of that 25 crores, how much will be allowed in different years? You are supposed to calculate that. Understanding? And this will be allowed as a deduction in the hands of Infrastructure Capital Fund. Now that entire 25 crores will be taxable as capital gain in the hands of Mr. Sen, no? He has acquired all the 10 lakhs bonds, no? How many bonds he has acquired? 10,000 bonds multiplied by 250. That will be the capital gain in the hands of Mr. Zen. Short term or long term? How did you come to know? Issued on 1st June 24 and redeemed on 1st June 27. So period of holding is more than 12 months. That entire 25 lakhs will be long term gain. Bloody, I have solved the question for you. Shit. But you are just supposed to present it. How will you present? Like this only you can present if you want. Yes or no? So do the needful and come with preparations tomorrow. Huh? Tomorrow we are going to solve many questions, and tomorrow very important part is going to start, because whatever we are going to do tomorrow in tomorrow's lecture, no, if the capital gain question is there in the exam, you will see the questions like which we are going to solve tomorrow. You will see the concepts which we are going to do tomorrow. Yes or no? So tomorrow we are going to end this chapter, okay? And if possible, if the time permits, we'll start with the new chapter tomorrow itself, okay? See you tomorrow. Bye bye. Say bye.